Hi everybody, Gage with Oxford Wealth here. We've got another OWA Live for you. We've had a lot of questions about Bitcoin recently. 9 out of 10 people that I meet with are saying, what is this Bitcoin stuff and should I be investing in it? So we're going to talk a little bit about Bitcoin and cryptocurrencies today. We're going to talk about what we think they're going to do, and we're going to talk about whether we think you should be invested in them. But before we talk about cryptocurrencies, we have to understand what currencies are. So way back in the day, currencies were a little bit different than they are today. We used to take our gold store and our silver store, we'd take it and deposit it with the bank, and they would issue these things called notes, or what we call bills. These bills would be good to trade goods and services and all that stuff, and then you could take your bill and walk back to the bank and hand them that bill, and they would exchange for you the gold or silver or whatever precious metal you had on deposit with them. Eventually it got to the point where the United States started minting gold and silver coin. Way back in the day, in the late 1700s, early 1800s, a 1 ounce gold coin was worth $1. That was kind of the initial standard when we were starting as a new country, how we were going to establish our value in our currencies. Then a little bit later on, the values of things started to adjust, inflation started to go crazy, and we changed. Instead of a 1 ounce gold coin, it was a 1 ounce silver coin that was worth $1. And then as time progressed on in the mid 1900s, we're saying, okay, we don't want all this precious metal kind of just floating out there in circulation. So instead, we're going to issue deposits kind of like they did back in the olden days. So I got a silver certificate here. This said I could take it into the Federal Reserve and say I want to exchange my $1 for an equivalent of $1 of silver. That changed in the mid 50s, early 60s. We went on to what's called a fiat currency situation, which means that instead of backing our currencies with actual, precious metals or commodities, we said we're going to back it with the full faith and credit of whoever issues it. And so we switched onto these, coins and dollar bills that we know today. They don't have any real backing other than the United States government. That's called a fiat currency. Now, when those fiat currencies started to be rolled out, people started to look at other alternatives. And especially in the early 2000s, we started to see this digital currency start to come up. We saw a lot of credit card companies. The scale tipped in the year 2000. More people were using credit cards than using cash. So not only were we trusting in this fiat currency system, but we were also going more electronic. In 2008, there were these guys that came together that said, okay, rather than the Federal Reserve keeping track of what all this money is doing, we're going to set up a private institution and we're going to make it transparent. Right now, you can't really dive into the books of the Federal Reserve. You can't go online and see exactly how all the dollars are being allocated. The government kind of knows all that stuff within reason. But with this new thing, with this new currency that was going to be revealed, they were saying, we're just going to build a computer program and anyone can log in at any point. They can see exactly where the Bitcoins are or exactly where the currency is. It's going to be 100% transparent. Now, we're not going to put names associated with it. That's still going to stay anonymous. But you're going to be able to see every single transaction that this currency makes. This was the age of Bitcoin. So Bitcoin was the first real cryptocurrency that was created, and it's created by mining these blocks or harvesting information. We build out these models or computer programs, very complex computer programs, build out these models and are rewarded with Bitcoins in exchange. Right now there are like 18.6 million Bitcoins, and the cool part about how the Bitcoin system works is there will be a maximum number. The maximum number is 21 million, so there will never be any more than 21 million Bitcoins. I say there will never be, that's until they change a few things. But right now, as it's stated, there will never be more than 21 million Bitcoins. And the last Bitcoin will be mined sometime in the year 2140. They've already forecasted it out, they already know how that stuff works. Now, with all of these pieces that they're building, they've made a currency. They made something that people could put trust in, just as much as we put trust in dollar bills. This is just a fun fact for you, the first actual transaction for Bitcoin One of the founders of Bitcoin took 10,000 Bitcoins and bought 2 large pizzas from a local pizza spot. To put that into comparison, that's like $160 million that he paid for those 2 pizzas. But they had no idea that Bitcoin would be as valuable as it is today. The way that we like to think about it, Bitcoin is incredibly volatile. There is a lot of price swing. People demand it. People don't trust it. A lot like people don't trust dollars today because it's only backed by the Federal Reserve. There's a little bit of trust that has to go into this, and that kind of makes things a little bit nerve-wracking. But the truth of the matter is there is a finite number of Bitcoins that will be mined. As long as we all see that there's some level of value in those Bitcoins, then there will always be value in Bitcoins. It's kind of the same thing as gold right now. Gold doesn't really have any value per se, but we have all assigned value to gold. And because we've all assigned value to gold, there will always be value attached to it. It's seen as an inflation-proof commodity. I don't know whether you should be invested in Bitcoin or not. It's kind of the same discussion as to whether you should invest in precious metals or really invest in anything. If you can stomach the market risk and it's something that interests you, then I think, sure, a portion of your allocation should be in things that interest you and things that you think will do well. But I don't think everyone should be there. Right now, the price of Bitcoin is sitting at like $32,000 a coin. At its peak, just a few months ago, it was trading at $40,000 a coin. Back when I was in high school, I wanted to buy an MP3 player, a Microsoft Zune. I jumped on to O.co. It was actually Overstock.com back then. And they said you could pay $240 for this thing, or you can also pay 300 Bitcoins for this thing. All of us have had experiences as to when Bitcoin was low and Bitcoin has been high. We all know when gold was low and gold was high. The important thing to realize is it something that you are comfortable with? Are you comfortable with the market risk? Now, let us know. If you're interested in something like that, we'd be happy to have discussions with you. But there's just kind of a snapshot as to what Bitcoin is, what these cryptocurrency things are, and how they kind of play into our system. Stay tuned for our next OWA Live segment next week. We'll be talking about other relevant topics that are interesting to you. And of course, if you have any questions or concerns that you'd like us to address on this segment, please feel free to add it in the comment bar below or send us an email. We'd be happy to discuss it directly. Thanks, and see you next week.